Dan, short term for the rest of the year, do you think we can keep this momentum up?
Yeah, I think, that's a questionable call. I agree with Mike that there's a lot of momentum here in the markets, but I think that there's a lot of reasons for pause. I think one is that the fundamental data, has been showing some signs of green shoots, but I think the market's really taken that and run with it. And some of the latest data that we've seen is actually suggest that there may be a little bit of head fake. So as we look out, to this year or the next few months, I think that there's a decent chance that, volatility could surprise to the upside. I don't think that really people are positioned for that.
Dan, when you take a look at earnings, the season is largely done here, but of course we had some of these retail names right towards the end, which gave us a look into the consumer. When you put it all together, what do you make of the season, and then what happens here to year end?
Yeah, I think that earnings is probably the most important thing for investors to focus on. When you look, beyond the fact that earnings surprised to the upside relative to that lower bar, if you look at the earnings of all the cyclical sectors, they're posting negative year-on-year quarterly earnings growth. I think that's the key. And then as you look out to the fourth quarter, as we saw, guidance got pretty heavily cut from the companies. You're still seeing that ongoing, which is why you've seen, forecasts come to post negative growth for the fourth quarter. And I think that's the key. Again, looking at those cyclical sectors, whether it's tech or whether it's consumer discretionary that everybody's very excited about, both those sectors are actually posting negative growth this quarter, last quarter, and the quarters to come. So I think that's the big concern here.
Bob, we talked earlier that you wouldn't take profits from the Microsofts and Apples of this world. Is there anywhere now at these records with just 6 weeks left of the rest of the year that you would be taking a bit of profits?
That is a hard one. I think, as a portfolio manager, you'd be looking at positions that have maybe swollen in size and chop it that way. In terms of sectors, I would not be. I mean, I think defensive have had their run, but they'll probably just mark time. They won't outperform the market. So you could probably trim there if you saw other areas you wanted to go into. But I think we're going to continue to see rotations as people look for, they want to keep in the market, but where to go? What stocks, like that's why the healthcare stocks have had a nice run in certain areas of it. And I think that's when we're continuing to see this rotation under the surface.